Welcome to Financial Breeze, your channel for financial tips. Are you worried about how U.S. elections might impact your investments? Policy shifts and economic tremors, from domestic markets to global ripples. These shifts can be sudden and unpredictable, causing waves of change that affect various sectors. U.S. elections often bring about significant policy shifts. The outcome of these elections can set the tone for economic policies for years to come. These changes can impact both the domestic and global economy. Market reactions can be swift, with stock prices and trading volumes reflecting the new political landscape. Taxation policies are one area where changes are closely watched. Adjustments in tax laws can have far-reaching consequences for both individuals and businesses. Corporate tax rates, for example, can influence investment decisions. Companies may alter their strategies based on the tax environment as affecting job creation and economic growth. Changes in personal income tax can affect consumer spending. When people have more disposable income, they are likely to spend more, boosting the economy. Both have ripple effects throughout the global economy. The interconnectedness of today's markets means that a change in one country can influence economies worldwide. Regulations are another key area of focus. Regulatory changes can either foster innovation or create hurdles for businesses. The U.S. has a long history of influencing global standards, especially in areas like finance and environmental protection. These standards often set the benchmark for other nations. Changes in U.S. regulations can therefore impact businesses and markets worldwide. Companies must stay agile to adapt to new rules and maintain compliance. The energy sector is particularly sensitive to policy changes. Decisions made in this sector can have immediate and long-term effects on the global energy supply. Decisions about energy production and consumption have global implications. The shift towards renewable energy is reshaping the energy landscape. They influence oil prices, impact investment in renewable energy, and shape the global response to climate change. The future of energy is a critical issue that will define economic and environmental policies for generations. Election jitters, market volatility, and investor uncertainty. Financial markets crave predictability. Elections, by their very nature, introduce uncertainty. The period leading up to a U.S. presidential election is often marked by volatility in financial markets. Investors become cautious. They may hedge their bets, and they may delay major investment decisions until there is greater clarity about the future policy landscape. The stock market, in particular, can experience significant fluctuations. Certain sectors, such as healthcare and energy, may be particularly sensitive to election rhetoric and potential policy changes. Currency markets also react to election outcomes. The value of the U.S. dollar can fluctuate based on perceptions of the future strength of the U.S. economy under a new administration. Trade winds of change, new agreements and barriers. Trade is another area where U.S. elections have global consequences. The U.S. is a major player in global trade, and its trade policies have significant implications for businesses and economies around the world. Different administrations may have different approaches to trade. Some may favor free trade agreements, while others may adopt more protectionist measures such as tariffs. Changes in U.S. trade policy can disrupt global supply chains, lead to uncertainty in international markets, and even spark trade disputes. The relationship between the U.S. and China is a prime example. Trade tensions between the two economic giants have been a source of global economic uncertainty in recent years. Section 5, the Fed's Balancing Act, Interest Rates, and the Global Monetary System. The Federal Reserve, as a central bank of the United States, plays a critical role in shaping the global economy. Its monetary policy decisions, particularly with regard to interest rates, have far-reaching consequences. Changes in U.S. interest rates can affect capital flows around the world. They influence the cost of borrowing for businesses and consumers globally. They can even impact exchange rates. The Federal Reserve operates independently of the political process. However, the president appoints members of the Federal Reserve Board of Governors. The political climate in Washington can therefore indirectly influence the Fed's decision-making. This adds another layer of complexity for global investors and policymakers trying to anticipate future economic trends. Section 6, A New World Order, U.S. Foreign Policy and Geopolitical Shifts. U.S. elections have major implications for global security and diplomacy. The president is the commander-in-chief of the U.S. military. The president sets the tone for U.S. foreign policy. Different administrations may have different approaches to international relations. Some may prioritize multilateralism and diplomacy. Others may favor a more unilateralist approach. These differences can have profound consequences for global security, alliances, international cooperation, and the overall stability of the international system. The U.S. relationship with key allies, such as NATO members and countries in Asia, can be influenced by the outcome of U.S. elections. Changes in U.S. foreign policy can lead to shifts in global power dynamics. This can create both opportunities and challenges for countries around the world. Section 7, Tech Titans in the Crosshairs, Regulation and Innovation. The technology sector is another area where U.S. elections can have a global impact, influencing policies that affect innovation and growth. The U.S. is home to many of the world's leading technology companies, which are at the forefront of technological advancements. These companies operate on a global scale, impacting economies and societies far beyond American borders. Their products and services are used by billions of people around the world, shaping daily life and communication. U.S. regulations governing data privacy, cybersecurity, and antitrust can therefore have global implications affecting how data is managed and protected. Different administrations may have different views on how to regulate the tech sector, leading to varying policies and enforcement. Some may favor a more hands-off approach, encouraging innovation and market-driven solutions. Others may push for greater regulation to address concerns about market power, consumer privacy, and the societal impact of new technologies, aiming to protect consumers and ensure fair competition. The outcome of these debates can shape the future of the internet, artificial intelligence, and other emerging technologies that are transforming our world, influencing how we live, work, and interact. Section 8. The Innovation Imperative, R&D, and U.S. Technological Leadership. The United States has long been a global leader in innovation. Its commitment to research and development, R&D, has been a key driver of technological progress. U.S. government funding for scientific research has played a crucial role in this regard. It has supported groundbreaking discoveries in medicine, energy, and computing. However, the level of government support for R&D can fluctuate depending on political priorities. Changes in funding can have long-term consequences for U.S. competitiveness in the global economy. A decline in U.S. investment in R&D could cede ground to other countries that are rapidly increasing their own investments in science and technology. This could have significant implications for global leadership in the 21st century. Thank you for watching. Don't forget to like, comment, share, and subscribe. Hit the notification bell to stay updated.